Four, three, two, one. What's up, Tim?
Hey, buddy.
Thanks for coming.
Yeah, thanks for having me.
It's been a long time coming, has it not?
Well, off air, apparently, it's been 2 years, I've learned.
Close to.
Yeah,
Close to.
it's incredible. I can't believe that I'm still comfortable enough talking to you after 2 years, given the
It gets tiresome, doesn't it?
does.
It gets tiresome.
It's people don't understand, the conversations, the calls and things and the stories and the intricacies. I'll just leave it at that.
We have some good stories.
We
Hey,
may.
let me. You have good stories, and I think I'm just really good at being entertained by them. We're going to try to pull a couple out today, right? A couple good stories.
Sure.
Well, I guess let's just move in with what you do, right? Obviously, you're a business attorney.
Is it obvious?
Well, I think we're going to have it probably in the title of the video too, right? To let people know what you do and what they're watching.
Yeah.
But I don't think that was what you came right out of college looking to do. I think, if I'm right.
I don't know how anyone, and now there are some that are very dedicated and motivated and know what they want to do, but 21-year-old Tim was not that guy.
Okay.
I graduated with a biology degree because I was pre-med,
Okay.
and that didn't work out. I didn't even apply to med school. The only reason I kept it was because I didn't want to do more school, because my hard science degree was so, as you can imagine, tailored towards science classes that anything else I wanted to do that interested me, I would have to take on so many other different courses that it would have taken me at least another semester. So I'm like, no, I don't want to do more school. So I just graduated with this degree, and I'm in New York City at the time, and it's, what do I do with this thing? Well, there's a lot of opportunity in New York. That's, one of the great things about New York City. There's a lot going on, a lot of opportunity. And I found this post online. I applied to it by mistake because I didn't see that it asked for a graduate degree. So I lucked into this spot. So I applied when the pool was probably much narrower than I was expecting. But it just so happens that the company was they're from London, and so graduate. And I'm not sure if this is even the case, but anyways, they even had like a misunderstanding of the terms. They thought they were going for kids just out of undergrad school. So they messed up, I messed up, and we met. It was fate. It was a derivatives technology, like derivative trading, specifically for like a middle office, back office. If you're familiar, so you have your traders, you have your middle office support, and your back office. Again, biology from that to this, I don't know how it worked out. They're paying me a lot of money. I was 21 years old. I was like, yeah, whatever you want. Sure, I'll do it. So
Living in New York City.
Yeah, living in New York.
Okay.
Yeah, so from there, we can go so many different directions, but that was the start. I mean, and that wasn't even, still at that point, law school is not in the picture.
Well, I think what I'm interested in, how do you get from New York to Chicago? Was it the law degree that brought you here, or did you come here for other reasons?
For a different reason.
Okay.
Yeah.
So then you probably went to law school here, I'm guessing.
Yeah, UIC,
Okay.
formerly known as John Marshall.
Okay.
Yeah. Yeah, so that was, over 10 years ago now.
Okay.
Yeah.
And were you litigating ever?
I came out of school as a litigator
Okay.
because I took some classes. There was one class in particular called trial advocacy, and I wish I could say his name. I'd butcher it. Long Greek name. He had a friend who was a judge in the federal building, federal judge, who let him use his courtroom as our classroom. So my professor, who's up there on the bench, and if you can kind of picture tradition, I don't know if you've been to the federal courthouse downtown, but it's somewhat of the traditional, the judge is kind of up above looking down and kind of intimidating.
Like TV, right?
Yeah.
Majestic, if you will.
Yeah.
That's right. Okay.
Yeah.
Okay.
So he was up there, and the class was basically a trial from start to finish. So you start with like picking a jury, you do opening statement, direct exam, cross exam.
Of all students. The
Yeah.
students comprised everything, right?
Yeah, the interesting thing was I took that a little earlier than most. A lot of people reserve that till like the end because they all hate it. No one wants to do that. But I'm like, that sounds great.
It sounds great.
Sign me up.
Super cool.
So I was in love with it. And I'm like, this is what I want to do. I want to litigate. So I did. I was fortunate enough to get a job. Actually, a clerkship, what we call a pre-lawyer before you actually pass the bar and get sworn in. And I did that for a number of years.
Now you're so you're litigating, but you're still in business law.
Yes.
If you will, right? Okay.
Yeah. So I've been with the same firm since I graduated, even before,
Okay.
as a clerk.
Okay.
And it's all business clients, small, medium-sized businesses.
So how do you what are you litigating for business clients? Where's the litigation come in, I guess?
Yeah, it's a lot of contract disputes, issues between partners, issues with clients or vendors, payment disputes, or you didn't do a good job kind of thing. Bottom line is it came down to money, right? Most of the time that was at issue. Ultimately was monetary damages. And I had some great experience in court. I did several trials, did a jury trial, maybe more than one. If I can remember one specifically. But that was all fun. I love doing that. Getting up in front of the jury, doing cross-exam.
Any moments that you recall that maybe stand out in your litigation time as an attorney? Any individual times where you stood in a courtroom and you know you did a great job, or it's just something that you will never forget?
Yes. We represented a contractor who was getting sued indirectly by a union for claiming that basically, I don't know how much you know about union work, but it's very specific on what certain people can do. You come off the truck and touch something, it's a different category, different costs, whatnot. So they were saying that my client wasn't doing something along those lines. And part of the lawsuit was also whether or not they were paving contractors. So whether or not they paved what they said they did.
Okay.
So they had this expert come on, really smart guy. You could tell, like, you know, I went through his report, probably 100 pages long, and I just noticed that of all of these pages, he took maybe 3 measurements, and this is a big parking lot.
Okay.
And so he took these measurements. Not only that, but he took them by the edge. And so if you know, like asphalt paving, unless it goes up to a curb, it kind of tapers off, right, to the side. So
Water, probably, right? Water, I'm guessing, but
maybe, yeah,
probably.
I'm not sure, but that's, you know, how
Okay.
it works.
Okay.
And so, I mean, despite this enormously long and obtuse report, it really came down to these measurements.
And there's 3.
There was like, I might be exaggerating, but there was very little amount. So I'm up there and I'm just letting him talk. You know, he really loves to hear himself talk. Just let him go. Okay. And then we get to the measurements. Basically, my cross boiled down to is like, so wait, you're telling me that your stance is my client didn't complete the job because of these 3 measurements? And he's like, well, I don't know if I would say that. I was like, well, how many measurements did you take? Well, I took 3. I was like, all right, so these 3 measurements are what you're basing this conclusion on. And he's like, he kind of like muddled around. I was like, oh, maybe not. You know, I was like, all right, well, where did you take those measurements? He's like, by the edge. And I started to go into how the thing tapered off. And he's like, so I was like, you didn't take any like in the middle, like where it was at its deepest? And you could see him on the stand getting so upset with me, like he wanted to jump out and just like wring my neck, like this guy probably had a PhD and whatever.
And you're young, right? So you're young at the time.
Oh, I'm young, and he's probably looking at me like this.
Little animosity.
Yeah.
He knows
Yeah.
you're poking the bear a little bit.
And
right?
I was probably antagonizing him a little bit with
Sure.
my tone.
Yeah, because
Right.
when you know you've got something, you're probably going to keep digging a
Yeah.
little bit. Is
Yeah.
agreed? Okay.
And at one point, I look up at the judge. It wasn't a jury trial; it was just the judge. And I just see a little smirk, and I knew that he knew exactly what I was doing, and that was the end of their case.
The end of it.
We didn't even need to put on a defense. We actually won on what's called directed verdict.
Okay.
Yeah. So.
Well, then, it sounds to me like you enjoyed litigation, but you got out of litigation.
Yeah.
Quickly. Not quickly, but you kind
After
of fell out of luck.
years.
Yeah.
Yeah, I did.
Okay. And what is the I don't know, what's the heart of what you're doing now?
I like to say I'm on the light side of the law, where litigation is the dark side, because you're at odds with someone.
I don't know if is that fair?
No. You can be at odds on what I do too, and it happens often.
I'm sure.
It's
Okay.
an easy way to explain it.
You're on the light side now. Okay.
But you know, what it is that now both me and the lawyers on the other side, we have an overarching goal that's the same. We want to sell a business. They want to buy a business. We want to get to the same point, right? Litigation, it's you want to go opposite directions. So it's very contentious. Now, I dealt with some great lawyers that it wasn't always so much of a feud. You're actually working together in litigation, which I thought was, my most satisfying parts. But then most of the encounters with lawyers and that is just like, I need to win every step of the way. And when you have and without getting too much into why I soured on the system, was it's incentivizing lawyers to not agree, to keep the case
So
alive.
now you're in partnerships.
Hmm?
Now you almost partner with the attorney at the other side of the table, but you have the same goal, the same mission. You want to help this. I mean, one of the things that I think you're an M&A attorney, right? Mergers and acquisitions.
Yeah.
So you help, and correct me if I'm wrong, right? But you really help not just companies merge and not just help people acquire other businesses, but you're also helping with contract latency, and you're helping with people that want to get out of their business too. So maybe with their exit strategies. Is that fair?
Yes. And I've only recently started using exit planning as part of what I do. I was always helping people since I started M&A exiting, right, during the sale. Excuse me. But I never looked at it like when we were initially structuring the company, or when I was representing people as like their outside lawyer, basically people that didn't want lawyers on their payroll full time. They'd come to me to handle their contracts and other issues. So this whole time, even though I was helping them get to a state for which they'd be better off when they sold, I was never actually consciously and actually talking to them as this is exit planning. Everything we're doing here is we're de-risking. We are getting better contracts. We are getting management involved so that it's not all on one person, because you can't sell a business that's just one person where they're doing everything. They're too tied to it, right? The business is the individual. So now I am more involved with telling clients and helping them understand that, listen, everything that we're doing, whether it's restructuring, whether it's getting better contracts, whether it's negotiating better deals with their customers or their vendors, it's all towards getting in a better state to sell. And the beauty of it is, if you have no intention of selling, at least initially, everything that we're doing just adds value for your business, So yes, that is where I'm at. And you have had the pleasure of joining me in many events now, and have either agreed to be brought on board. Is that right?
It's right.
Yeah.
Well, you are. I think we skipped this part, but
Yeah.
you're one of the founders of EPI Chicago, right? Which is the Exit Planning Institute.
Yes.
I would say the first time I was reluctant, right? It's on a Wednesday, and carving out time as a small business owner is tough, right? It can be tough. When I went to the first event, I met Shonda. I met some great people, Marianne, and I realized that room was comprised of professionals that could really help each other, refer each other, and help each other, right? So it's a great group. You told me I was, nominated for a board position. And when Shonda had reached out to me, and we had played phone tag, I told you we played phone tag a couple times, right? So she had called me, and then I called her, and
Yeah.
so finally we got on the phone, and Shonda says, "Hey, would you be interested?" And I had an idea what was coming because me and you had talked a little bit.
Yeah.
And she said, "Hey, would you be interested in taking a leadership or whatever her language was?"
Very diplomatic she is.
Very diplomatic, wonderful lady. We got to get her on here probably. But I told her, yeah. I asked her about the time commitment, what an hour a week, whatever it was, and what she said sounded good, right? But she said, "There's a couple of things that we're going to want from you," and I said, "Hey, do you mind if I'm going to give you pencil in my yes? I'll confirm with you the next couple of weeks." Well, 2 days later is the holiday party, right? The EPI Chicago holiday party. And no more than 30, 40 minutes into the thing, she announces me as now being a formal member. What's my position? What is it called?
You're a committee person.
I'm a committee person.
Yeah.
And so she announces me in front of a room full of people at a holiday party. There might be a couple of cocktails open. And I realized I had made a hard commitment to Shonda that day.
Yeah.
And so she locked me into that.
Well, congrats and thank you for your
Yeah.
for
Yeah.
your
I think
interest.
it'll be cool. I think it's a good organization.
Yeah. What do you think though about what you do is connected, or what do you think that exit planning or said a different way, since we started talking about exit planning, and maybe or not, maybe it's been with or without the group's influence, how has it changed what you do, if at all, when you're talking to clients about things?
Well, what I do professionally encompasses a few different things, right? Some people call us financial advisors. Some call us insurance agents. The most accurate term is probably financial security consultant. And I think that plays into what you tell your clients too, right? The first line of defense is probably not how you structure your company. The first line of defense is probably not all these different things that you can put in place. The first line of defense in protecting your business is probably insurance. And so I think asset protection, protecting what you've already built, is as important as growing your assets, right, with your financial plan. And so what I think exit planning, so the members of EPI Chicago, there's a lot of wealth managers in there. There's a lot of financial advisors. There's accountants. There's attorneys. There's CPA. There's a wide range of people there, but we don't have anybody in the insurance world there. And so I wasn't sure how I fit in. If you remember, I said, "Hey, man, there's 500 wealth managers here." And that's good because they all bring their own thing. We need all 500 of them. And I'm exaggerating with the 500, Nick, just in case you're wondering. We need them there. But I thought that nobody really was discussing the insurance part of it. Because not only does asset protection or property casualty insurance come into play, but so do things like life insurance and disability insurance and long-term care insurance, those things that really could protect you down the road. So I think that my partnership with EPI will be less focused on the financial advisor aspect of my role and more on how I could complement the things that you do and what Shonda do and everybody else with the insurance knowledge that I have, if that makes sense.
Yeah, it does. It's incredibly important.
Well, I feel like when we went there the first year, it's been about a year since we've been there. I think we've there was nobody in insurance. And in the beginning, I felt like maybe we don't need insurance, right? Because there's nobody there. Sometimes we do that in a room. We look around and say, where do we fit in? Where is my place in this room? And the more I learned about exit planning, and I want to get certified, me and you have talked about that, the more I realized that insurance might be one of the most important aspects. At one point, Shonda asked me, have you ever been involved with a client sale? I said, a number of them. You're working with one of them right now. A number of times. And she said, well, what did you do? And I said, I got out of the way. I had to let their attorney handle what they need to handle. I had to let their accountants do what they need to do. And I think as the FA or as the insurance advisor, it was my job to let the other people do what they do and not intervene because I'd already developed that relationship. Does that make, I didn't need to consult. There were times I had to collaborate with the accountants. I had to collaborate with the attorneys. I had to let them know what financial assets they had. I had to let them know what what retirement plans they had in place as a business. But for the most part, I just need to be quiet and let your department do what you do. I don't know if that makes sense or if that answers your question, but I enjoy it. I'm excited about it, I think.
Yeah. No, it answers the question. And I think when we talk about exit planning, one of the first things is, identify what you have already and then protect it, right? A lot of people business owners in particular, are about increasing what they have. I'm going to double my revenue, and hire more people. I want to break into this market. And while that's great, they're entrepreneurs. Who can blame them? We still need to protect what they already have, right? And when something goes wrong, if there's an accident, what's the first thing someone always does? Are we covered, right? Who do they call? Their insurance rep. And so when I'm talking to clients about, all right, protecting your assets, what you have now, that's fundamental. So what's your insurance? What's your relationship like? People listening probably don't know that you're my personal insurance rep.
And you're my attorney.
Yeah.
And you've gone to bat quite a number of times
Yeah.
for me and got me into a much better position than I thought I was going into, right?
But I switched to you after we developed a relationship. And it was important to me to be able to I have a question about, a house, whether something applies or even in a particular case where you ended up finding me some money that I didn't know existed, it just came up naturally in conversation. I wasn't even asking a question.
True.
But you heard it. You're like, Tim, wait, whoa. I think we can cover you for that. And I was like, no way.
And it worked, didn't it? Didn't you
Actually
get it?
Worked.
It wasn't a ton of money, was
No,
it?
it wasn't a ton
like
of money.
500.
Let's just to finish the whole story. I got a new refrigerator. I'm sure a lot of people have gone through this exercise. First of all, it's very stressful. You don't think about this when you buy a fridge, but if you're like me, I only have one fridge. So you're trying to time when to take everything out of the fridge, especially the frozen things. Line it up with the delivery, right? So I'm at home. I'm like, hey, can I get 15 minutes notice of when you're going to be on your way? Oh, yeah, sir, of course. They always do that as a matter of practice. Like, okay. I'm sitting there. I get a knock on the door. They're here. I'm like, well, I'm not ready for you guys. Now I'm scrambling. Me, I'm an organizational person, so I already planned out where I was going to organize everything on my counters for each part of the fridge. Mm-hmm. And now I'm just kind of like dumping it out because now I feel bad for them. That's how I am. I'm like, oh, now I'm delaying them.
Yeah, they're waiting on you. They're watching you unpack your fridge.
Yeah. So
that's great.
I'm scrambling. I'm throwing things everywhere. I get the new fridge in. They test it out. It looks great. It's beautiful. They even take off the plastic off. I'm tipping them. I'm like, I'm in a great mood. I hated the fridge we had before. I'm so happy with this new fridge. Now I'm loading stuff in. I'm organizing it. And again, I take opportunities of moving, in this case the fridge, as like, oh, I get to reorganize this stuff. And it looked great. It almost looked like when you're looking at a fridge advertisement, and they open up the doors and they have all the produce and stuff neatly lined up. Like that's how
You're very proud of this.
I'm very proud.
And it looked great.
Yeah. So anyways, I get it loaded up, shut it. It's a smart fridge, so everything's on the app, and I'm just like, oh, temperature's kind of high. That's weird. Well, it ended up being a Lemming. It was just not cooling off at all. And I'm not going to say the store I bought it from, but I was very disappointed in their reaction. They basically told me I had two options. One, I could wait for the tech to come out. Now, I got this additional coverage. I didn't really pay anymore, but I was like, yeah, why not? It's basically a throw-in. And they're like, well, he's got an opening in 2 weeks. I was like, ma'am, do you understand it's a refrigerator? My food doesn't have 2 hours, let alone 2 weeks. She's like, well, then what we could do is just do a full replacement. It's like, great. It's going to take 2 days for that. I was like, again. So anyways, I lost all the food. Like I took pictures, there's garbage. And I don't like to waste. So it was very sad. I went from this new fridge, this beautiful fridge, to now this waste
throwing
of
out food.
Throwing
You're
out all
wasting
this
food. It's gone.
Yeah.
And we covered it, right?
And yeah, we did. You did. And I was just talking to you, just commiserating, not like looking. I didn't call you to talk about that. We were talking about something else, and I ended up doing what I'm doing now. And you're like, wait a second. I think. Not even promises. Like, I think, but let me talk to my claims person. And then, like, within an hour, you're like, yeah, we can cover it.
Super happy.
And it was so easy, and it didn't affect my policy. I just had to catalog it, and they gave me $500.
Yeah, the 500 probably didn't change your life.
No.
But I think it's about having a little bit of the rapport, the relationship, normal conversation things come up. I think the same with how you've helped negotiate obviously this contract and some of the other things you've done for my clients, right?
I when I get a referral, I'm very, first of all, thankful, and I treat those clients as if I originated myself. I talk to them myself. Like, everyone gets the same treatment. I respond probably quicker than most people. I'm like, great, thanks. Like, let's get on the phone. Let's talk. And now I have privilege, so I'm not like giving you up to dates on how we're going. I'm just like, but thank you, So, yeah, we've worked together a number of times, and I've sought opportunities where, again, take for example, helping someone buy a piece of commercial real estate downtown or really anywhere.
Yeah.
What do they need?
I think people need coaching, right? I think they need advice. I think they need advocacy.
They did, but
right?
I was going for insurance.
I know. No, I know. but I think that and law and the tax world, I think those three professionals that I think should look, there's three professionals that most people have in their lives, 3 or 4. And I think in their lives, those 3 or 4 professionals do a great job at what they do, but I feel like they don't know what the other professionals are doing. So most people have a financial advisor, and then they have an insurance agent, and they have some form of an attorney, maybe a couple different attorneys, and they've got an accountant, right? And while all of those professionals, impact that person's lives, that person's kind of in the middle trying to coordinate those 3 people or those 3 or 4 industries, and they don't really know how they fit together.
Yeah, the game telephone you play as a kid?
Of course.
Right.
Of course, yeah.
It's the same thing. And we expect the client to take something that is so unique to our profession, to understand it, and then relay it to someone else who's in a different profession.
And coordinate it.
Yes. They don't have the
it.
time, the ability,
Or the knowledge.
and they shouldn't have to carry that burden.
Well, that's why you're right. It's important to have good professional relationships. It's also good, I think, to make sure that if those people aren't going to communicate, it's good to have some basic understanding, which I think is one of the purposes of today, right? To give some information to people. They can access it online and maybe give them a leg up in what questions to ask their professionals.
That's what it's about, right?
So
asking the right questions, listening, hearing where they're at, where they're going,
100%.
and asking the questions.
100%.
It's easy to stay in your lane and just be like, oh, I'm the attorney. I'm just going to do the deal and I'll get the deal done. There's a lot of great attorneys that do that.
There are.
Right? There's not a lot that are like, well, what are you doing after you sell? Are you working with you already planned this out with your wealth advisor? Have you talked to your family? What's your plan? I just had this conversation with a prospect, and it was the same conversation I have with everyone going through this, and a very similar response to what a lot of owners in his position. He's grew his business from nothing to very, very, not big, but a very successful company, 30, 40 years. It's his baby. And he's like, I'm ready to move on. I'm done. Like, I already got the buyer. It's like, that's awesome. I'm happy with the price. It's great. What are you going to do afterwards? He's like, he just starts laughing. He's like, I don't know. I'm going to go play golf. I was like, okay, then what are you going to do? He's like, well, does it matter? I'm going to be a millionaire and I'm going to be playing golf in my summer home down in Arizona. I was like, I think it does. Because think about your day for the past 30, 40 years. What it was. What were you doing? Like, when do you get up? Oh, I'm up at 4:30 every morning. I don't get home till 7. How do you think mentally you're just going to be able to just turn that off? It's like we were talking about the other day. Like, and what I just learned is that not only is it like a great mental shift, like physically affects you. Like, the science has shown that people who are in that grind day in, day out, that then suddenly just change, like that hurts them. That's not like, oh, they're relaxed now and the stress just goes away. No, they drive themselves crazy because they don't know what to do, or they atrophy, because they stop working out.
Mental atrophy probably as well too,
Yeah.
right? I mean, you have to keep your brain moving. I think most business owners enjoy what they do. I think it's how we identify. And I think having some form of continuation or succession planning with that company, I think gives you peace for the next stage of your life. At least that's what I think I found with my clients. And I think having somebody walk them through, right, that succession plan or that continuation plan, whatever it might be, I think that gives them peace of mind where they can work those last 5, 10, 15, maybe even 20 years knowing that there's a plan in place. The thing that I find difficult, and because we do a lot of commercial insurance, so a lot of business ownership, but the thing that I find difficult is, when do they start that plan? Is it based on age? Is it when you know how you're going to hand the company down? Is it when you know you're going to sell it? When do you start getting somebody like you involved? Because it's probably not day one. The guy that opens up the insurance agency the second day on the job when he's learning his CRM system, that's not the time to begin the exit plan, if you will, right? So how do I find the right referrals for you? Or if people are watching, how do they know when to call you?
No matter who it is, the answer is always now. Even that person you just described. Because it's not literally planning for the sale. It is doing everything that you should be doing that will result in a better exit, whenever that is. So even if it's not in your foreseeable future, you're just starting out. What we're doing at EPI and Exit Planners is doing things that protect what you have and enable you to grow no matter what stage you're at. Okay. And it's introducing, and this is a key part, it's getting owners connected with the right type of advisors that look at it holistically like this, that it's not a single transaction. One of the things that I'm getting away with in my own practice is referring to myself as a transactional attorney. All like M&A attorneys, business attorneys commonly refer to themselves as transactional attorneys because it's mostly a client or a referral coming to them for a fixed project, fixed in time. We happily do it, and then we send them on their way. There's no relationship there. And it was part of what I was doing for the past couple of years before that, of what, not say frustrating to me, but challenging, because I was doing everything that every other attorney that I saw was doing. It's like, get a referral for a deal, you be happy about it, you get paid for it, you close the deal, your client's happy, you should be happy. But what I was finding was that, let's say I got referred for a business sale, and I noticed, just as an example, when you sign up, when a buyer puts in its letter of intent and starts due diligence, its homework, if you will, into the business, and some buyers are very sophisticated, they have a whole list of things, and it's a lot of financials, but that's rarely the hiccup. It comes down to like some other intangibles, a lot of contract issues again. So if you're, I was talking earlier about the business that's so ingrained in the business that they do all the sales, they're all the ops, they're the managers. You find times where clients of those owners are doing business because they like that owner. A lot of handshake deals, right? So you get a situation where the owner's like, this client's been buying from us for 10, 15 years. They buy more and more every year. They love us. It's like, okay, what's your contract say? I mean, we haven't had a contract in 10 years. That hasn't been a problem. It's like, yeah, but it's been all you, right? So you got to put your shoes in, you put yourself in the shoes of the buyer. They're coming in. You aren't going to be in, or you're not going to be in there much longer. What's keeping the customer? Because you're most likely talking to one guy who's probably your age, and they have a next generation that wants to do things their way. When you're gone, when he's gone, now this next gen is just looking around. If there's nothing binding them to you, what is the buyer buying there besides a promise, if that? Right? That's a risk, right? So this is something that I could easily help with. I've gone through this, and people think, owners think, well, oh, they're not going to want to sign a contract. I've never had one customer who wants to do business with you be like, I'm not going to sign your contract, because they still want to do business with you, right? So that kind of example, that's the kind of thing where it's like, why am I not having these conversations earlier?
You had told me, we talked a little bit, obviously, a little preparing for this, and it resonated with me because it's a term that I use. And so, yeah, we'll probably pivot to me in a second on this, but what did you mean when you told me that one of your focuses is asset protection for your clients when you're structuring the legal setup? Was that the words? Is that how you phrased it? Or am I getting it a little bit wrong?
No, definitely asset protection is key.
Okay.
And that comes in the form of many ways, but it's just a fundamental understanding of first what you have and then how are you protecting it.
Okay.
Right. And for me, it could mean like a simple example as like a real estate investor who owns either by themselves or with a group of people several different properties, but either they got it in their personal name or, maybe they have one LLC and they're just kind of using it for all these things. And, it's very easy thing to understand once someone like me explains, if you have a claim, if everything's under the same roof, let's say that one LLC, and you have all these properties, and there's a claim over here, a creditor is going to, if the claim is big enough, and this is where insurance comes in largely, all of these other assets are at play, right? And it's relatively inexpensive to structure this in a way that if there's a claim over here, it stays over here. It should. Now you have to follow through on not setting up a company, which is a different conversation. But in theory, if you have all these different entities, there's a claim under one, it stays under that little roof instead of the big roof, right? And so, again, when I'm meeting with clients and a lot of entrepreneur types who they're looking to expand and grow and sell. It's like, all right, well, what do you have and how are you protecting what you have now? Because you could be so successful on your next venture, but if this isn't protected, it can ruin everything. Again, and it doesn't take very long, but just takes a little bit of time to appreciate that and put in some reasonable measures to make sure that this stuff that you're doing over here isn't impacted from what you've already done over there, right? And for you, where that, again, if we're sticking with the real estate example, is, okay, you're looking to, this is your next investment. Who are you using for your insurance, or who have been? And what I've found often is that, and the same goes for attorneys, is that there's no relationship there with their, how did you structure financial capital? No, never mind. There's no relationship with their insurance rep, right? So they don't know what their situation is over here. They are only looking forward. And so what as you know, it's like, well, we have to talk to Phil. Phil is going to do a lot of stuff for you. And to be honest with you, he's not seeing a direct benefit from it. But he's going to do it because he knows it's the right thing. And he's going to do it to make sure that you're protected.
Well, what I have found, or what I foresee, is it's probably in the worst case scenario, right? It's better to have the insurance company writing checks for you instead of you writing your attorney checks to defend you. Probably. It's just a matter of cost mitigation and I guess cost benefit, if you will, right? So, yeah, as selling insurance products, sure, I think that's a great way to do it, but I also think it's the simplest. And the other thing, when I explain, for instance, a liability umbrella to my clients, whether it be a commercial or personal umbrella, I always verbalize it or try to paint the picture that you're really buying legal representation. Now, that's not what the legal contract stipulates of an umbrella, but remember, your insurance company will defend you to the limit of their assets. Right? So if you have an auto policy, a commercial auto policy that pays $1 million or $250,000, whatever it is, once a loss gets around that area, your insurance company is probably going to write a check. And at that point in time, their contract is fulfilled and they walk away. And once the dollar amount goes beyond that, right, that limit of insurance, chances are that you're now paying for your own attorney's fees. So over an extra $500, $1,600, $2,000, $3,000, $5,000, depending on what the risk is, it's usually worth offsetting that legal risk, right, or the risk for the legal fees. And I also believe that I think you have to have the right contracts in place. So, contract latency is one of your specialties. You found that in some of the contracts that you reviewed that I had in place, right? So making sure that you can mitigate your risks from a legal standpoint and a contract standpoint is as important as I think having the right liability insurance, right? It goes back to what I said about your 3 or 4 professionals. They really should collaborate and work together so that when that once in a lifetime thing happens, that your future paychecks are protected, if you will.
Mm-hmm.
Don't know if I verbalize that the right way, but it certainly seems to make sense, when I look at it from your perspective too.
Yeah. I can have the greatest contract in the world. I think I do a really good job of making a great contract. But a lot of my remedies are dependent on the opposing side. They're the ones that ultimately would pay, in theory, if something went wrong. And if they're non-existent, they have no money. Well, what else do we have? A lot of times, insurance is invoked there, right? So insurance is incredibly important for protecting the assets, whether it's in a deal with someone else that you're buying in or whether it's in acquiring another piece of property. It's fundamental. And to your point, yeah, I like to talk to my other advisors that I'm working with clients. I actually had an interesting call. This is probably a few months ago now, where it was a bank. I've worked with the bank before, but not the lender. So my client was buying, I think it was just a standalone piece of commercial real estate. I said, and there's financing. And I said, who's your lender? He's like, all right, send me their contact info. I want to give them a call, introduce myself, and open up that dialogue. And I'll throw myself under the bus here because I tell people this isn't mine. I forget who told me. I wish I did. I'm bad with remembering people's names. Terrible to say.
That's all right.
Well, he told me, he's like, Tim, there are three things that can cause a deal to go off the rails. The 3 L's. Lawyers, landlords, lenders. And it is, many times. If the lawyer doesn't know what they're doing, or if they want to fight every little issue, definitely I've seen deals break down because of it. Landlords, they're the wild card. You have no idea what some of the landlords are going to do. The institutional landlords, the big landlords, it's pretty obvious what they're going to do. They're very stringent but predictable. The solo landlords, oftentimes they won't respond at all. And what do you do in that case? All right. But what I was getting back at is, so I call a lender and they're like, hey. I'm like, hey, I'm Tim. I'm the attorney for so-and-so. I just want to introduce myself. If there's anything I can do at this point, I know we're in the early stages here, but, I want to help you get the deal done. And you could tell he was surprised. And I even asked him one point, I was like, you seem like surprised that I'm calling. He's like, I don't talk to attorneys this early. Because the lender often is like, they will give the approval. They will wait. They might ask some questions. And then when they get a closing pitch to them, that's when they kind of hunker down and really complete the underwriting and close on the loan. But I don't like to wait till that point. I like to keep them at least involved, ask questions, because I'm always cautious of the 11th hour third party unpredictability.
With lenders, in my experience, it's always the 11th hour. We had that recently. Wasn't I trying to get you a property certificate for a purchase, and I got it over to you and they didn't want it. And then finally, a day before closing, they were asking to make changes. I think that just happened with I can't say it's but Mark. I think it was last minute changes, but they had the certificate in their hands for call it a month. And they called me the day before the closing saying we need 35 changes on this. whether it be periods or dots or
Yeah.
commas or whatever in the language, right, of the certificate. So
It's been sitting with them for how long?
I
and
share
then
your
that-
frustration. But I do want to say, though, on their defense, right, because we work with a lot of
Yeah.
lenders, too. In their defense, they're handling a lot of paperwork, right? And in many instances, those loan processors, like, look, all businesses are trying to do 4 or 5 things today, right? They want to gain cash. They want to increase their cash flows. They want to reduce their costs, right? Probably improve productivity, which is key, which means do more with less. So I think a lot of these lending houses are learning how to do more with less as a means of cost control. So when you've got a handful of people that are closing thousands of loans for a bank a month, it probably does come down to what's next on
Sure.
plate, which is probably why people like you and me are it can be frustrating and difficult because we wanted this cleaned up a month ago. But because you've got so many people doing such a great job at the last minute and they're always working, I got to work on what's closing tomorrow.
Right.
I'm quick to criticize too. I just think that sometimes you have to peel back a couple. I'm not correcting you, Tim. I'm just saying that sometimes you have to peel back that layer and look at those 4 or 5 people in that home office that are making everything work.
Yeah.
I
Well,
mean, they're making the ship
Yeah.
run in the lending, right? And so those are usually the people you're talking to as well. And they tell you, "Hey, I got this yesterday, Phil. I was working
Yeah.
42 cases this week
Totally.
or whatever." So
And that's why when I talk about the 3 L's, I start out with lawyers.
yeah.
Yeah.
You guys make it difficult too sometimes.
Oh yeah.
You remember this case? We just couldn't get a response sometimes, and then it would take a week.
The no response is the toughest response.
And again, it's busy people, though, right? You have to handle sometimes in this world. Everyone's trying to run more efficiently. We're in a new world, and I think corporations are learning how to run more efficiently, like what they did in 2008, right? And so I think that sometimes comes with fewer people, and
See, I've seen it kind of go back and forth where, yes, technology has just allowed us to do so much more in so little time that everyone became enamored with it. And then everything became automated. I think now, especially post-COVID, people realize, no, if I need something in a pinch, it's going to depend on the relationship I have. I cannot, in that situation, call a 1-800 number and expect to get anything done anytime soon.
so tough, isn't it?
Right.
Sometimes.
And I think a lot of owners, especially the next generation of owners, they realize that and they appreciate like having relationships with their advisors. So
All
that
of them.
Yeah, so they're not stuck with just an info email or an 800 number, right? They know it's like, oh, this is a financial advisor thing. I got to call Phil. It's an attorney thing. I'm calling Tim. And they answer the phone and talk about it. And then Tim calls Phil. That's the beauty of it. Because in that case that you gave,
You're collaborating. It's a partnership, right?
and we got it done.
It's and I'm going to pivot again too, because
He likes to pivot.
I do like to pivot
Big pivot.
sometimes, right?
Yeah.
Well, the thing is I think we both touch on so many different things with our clients that
Yeah.
I want to be efficient with our time. A big part of business contingency planning. Let me rephrase that. Let me recollect my notes. A big part of business succession planning is what's done from the perspective of the owner and how that business, right, will continue to run. And if that is done by means of a sale or transfer to another partner, an important part of that calculation is the valuation method of the business. And you touched on that earlier, which is why I took a note. Explain to me a little bit. So here's my understanding about valuing the business, and this is far outside of my area of expertise. But we've got an asset-based valuation, income-based approach, right, and then a comparative market approach. So are you able to go into a little bit of that when you're helping a client value their business?
Yeah. So the beauty of what I do is I don't actually do valuations, but I know enough to ask.
Right.
When I get a deal that comes to me, and oftentimes I'm not brought in until there's a term sheet or a letter of intent that states the price. And if that's the case, there's not much I can do. But if I have a client that says, it happens more often with they're selling internally, maybe to family, maybe to key management, they say, hey, I'm I'm selling to so-and-so. He wants to buy. I'm pretty confident in the price. And I just asked, well, how did you come to that? Right, so I don't get into the specifics. Just, well, how did you come to that? Well, I had a friend that's in the industry, sold a couple of years ago, similar size. And it's like, okay, is that it? And oftentimes it is. And so when you start to ask the questions, you can almost see the light bulb go off, and they're like, oh, okay, maybe I should spend a little bit more time on valuing my business. And so I know people that do that all the time. And to be honest with you, I don't know exactly which method they're using, but I rely on them. See, I ask the questions, and then I understand enough to know that that one scenario probably isn't going to be consistent with your own circumstances, to which it should be like for like. Talk to someone that does. This is, again, a huge moment for something you've been building for years and years and years.
It's your baby.
It is.
It's their baby.
There are people that do that day in, day out, 24/7. I guess it's the same thing. You know what I'm trying to say.
I do.
Right? So, and then they will do that analysis, and a lot of times it is comparative. They look at it within the industry. They say, all right, look at your earnings, your EBITDA, and then we're going to assign a multiple, and then we'll find out where you land within that range of multiple, and that's where you get your valuation, in short. But you'd be surprised about how many people, especially within the internal sales, they don't go through that exercise. And the beauty about valuation is you can do nowadays so many different levels. You could do like a quick and dirty, almost back of the napkin valuation. It's cheap. If you're a really small business, makes complete sense to keep it at that level. If you're bigger, you can take it deeper. It's a longer process, more expensive, but circumstances warrant it.
Well, here's why I asked.
Yeah.
You talked about some of those things that can throw off a process. And I think I was talking to Marianne at EPI Chicago. And I think she had told me, and I think, that one of the biggest things that could screw up or delay the transfer of a business through a sale is a disagreement on what the company is worth, right? The valuation. So kicking it back to you, I know you said now, to the last time I asked you, when should you get the professional involved? At what point do you think a professional or a business owner should start thinking of getting the company valued?
Every year.
Okay.
I think once you get your books closed, maybe even you wait for first set of taxes to go through, you do evaluation every year.
Every year.
Yeah, because a lot of people are just going to look at revenue. Revenue is a piece of it, but it's just part of the story. Right? Get your valuation done. If you like the people that did it the year before, keep going back so they have the information, right? It won't be as long of a process. Get in that routine.
But no, would you argue, it's of my opinion or my training, that no valuation is audit proof, though, right? Just because you're doing it every year doesn't mean that somebody's not going to come in and tell them that they see your company in a different light.
Yeah,
Agreed?
when you're talking, and auditing, talking about from that perspective, they will use different methods, I'm sure. When you're talking about the sale, which is what most owners are concerned about, that is something that should be done, I think, annually. And because you're just, again, a lot of people, and they could be correct, you're increasing how much revenue you have. You should, in theory, go up in revenue, in value. But you may not be doing anything that affects where you land in the range of multiple that gets assigned. And that's again where it brings us like, wait a second, I went up $1 million this year. Like, how am I at the same, or how am I lower? That doesn't make any sense to me. All right, well, let's get into it. Here's why. Right? And the valuation advisors, they're going to tell you why. Right? Revenue is a part of it, but there's all these other things. Right? And then the exit planning, again, the light bulb goes off, and the exit planning comes more clear.
It's good stuff. I think when me and you started discussing this podcast, I think we joked about it in the beginning. It's been about a 2-year process, right? Give or take,
Mm-hmm.
maybe not exactly 2 years. But I did a seminar for the Algonquin Police Department. It was a
Yes.
It was a financial.
I remember.
It was a financial services seminar, right?
Yeah.
And that was a nice partnership that we have, or is a nice partnership. But you sat in on that seminar.
Mm-hmm.
And we ended up having a cocktail or a conversation. You said, I said, I think we should do a seminar together with what you do and what I do with business owners, everything from commercial insurance to 401k plans to group healthcare. I thought that we should collaborate and put a seminar together. And so we met again, right? We sat down at a bar. I came prepared. I had 1,000 slides. There's 1,000 points of overlap with what you do and what I do.
Yeah.
And we said, forget this, right? Because you're going to get, again, how we're doing this, you're going to get 10, 20, 50, maybe at best, people to come to our seminar, but that's not a broad enough scope to get this information out, which is how we settled on this format. But once we were writing this seminar, one of the things that I thought we could help each other work together more on than anything else are buy-sell agreements. Most of my small businesses are partnerships. We've got a high amount of sole proprietorships, but we have a lot of partnerships as well too in my book of business. And I think that it's common. Now, I've helped work on the insurance element of a buy-sell agreement a number of times, but I think that might be something that should be put into place, in my opinion, in the infancy of a company, is making sure that they know how that asset's going to transfer, whether there's a death of one of the owners or somebody just wants to retire. How often are you getting into buy-sell agreements? How do you advise those clients? And tell me a little bit about that.
Yeah, I require my clients to think about it at the formation stage. Any multi-owner situation, multi-member, multi-partner, whatever, that's a focus of what I bring when I'm drafting their governing docs. And it's the one that evokes the most discussion, as you can imagine. Like, no one's thinking about this, right? You're going into business with somebody, you're not thinking about if they get hit by a bus the next day, right? But the fact is that, it can happen. It does happen.
It does.
Right? And so in those situations, you not only have to get over just the tragedy of it all. A lot of people go into business together are close, right? And there's that whole aspect, but then there's a matter of what I like to just narrow down as certainty. Okay, my business partner suddenly passed away or became disabled. What does that mean for his half of the company? What can I do? I mean, I did not go in business with their spouse. Right? I don't want anyone else to come in. Like, I am sympathizing with them, but this is still, I got to run a business here, and I can't have someone who doesn't know what they're doing just come in just because they have an ownership stake. So what I provide in my docs for that situation is certainty. It's what you can do, which is usually triggered repurchase option of membership or ownership interest. And it'll set out the price, talk about valuation. You can get very detailed into it. Start with fair market valuation and kind of go from there. Time, and then whether or not it can be paid with cash or debt or a combination. But it gives the non-transferring owner options. Otherwise, if they did nothing, that economic interest at a minimum would shift to the estate in the case of death. But there's no trigger, there's no options to buy. You're now left to really negotiate. And can you imagine you're running this business now by yourself, and half of your profit is going to someone who's just kind of holding interest and not participating,
or somebody who can't participate, right? Especially if you're
Can't, or
talking
they don't
somebody,
want.
maybe it's a labor, maybe
doesn't
it's a
work,
trade.
right? It doesn't work for either side.
So I've seen a couple different ones, and obviously this is more of the legal side, but right, there's the cross purchase agreement, and then there's the entity purchase, I believe. Most of the ones that I've seen have been entity purchases, even though there's been two people. They found it best that the entity takes ownership of the funds,
Yeah.
right? And that way you could use some funds coming from the entity could pay out to the family. And then even though life insurance is free, they like it going to the entity. And I
Right.
want you to correct me, because the value of the company comes into play, which means that there is a step up in cost basis, which relieves some of the tax liability that the surviving family members would not have to pay. Is that why you think most even small companies are now doing entity purchase?
Yeah, definitely. But I get to the point where, again, I know enough to ask the questions about that, their preferences, and I'll kind of touch on that. But then I have the benefit of just referring them to you to kind of really go through those specific details into where.
Well, even then, that's where the accountant comes into play too, right?
Yes.
I never make these advice or these consultations without the accountant or you by my side, but I think it's nice to have somebody quarterback the plan, if that makes sense. And
Yeah.
so yeah, we've seen a number of those. We've also seen the plans where I think you can choose later, right, how you want to pay out. Have you ever written any of those buy-sell agreements?
I'm sure I've written something
Okay.
like that. Yeah, I mean, you could do it infinite amount of ways, but you have to choose one. You gotta choose one. And that's why it invokes most discussion, because people aren't thinking about that at all. They don't want to think about it. They're uncomfortable. Well, I don't want to think about that. Death, disability, divorce, disagreement. Some people use a fifth deed. I never remember what it is, but it comes down to those situations most commonly. And it's like, this is really why you're hiring me to do this, is to ask those questions, because you don't want to ask each other. Right? And it's,
Fair.
but it's so incredibly important. It really is really a non-insurance insurance. It gives you an option when things are terrible, when there's a claim and there's tragedy. You at least have some certainty as to what your options are.
And you have a current valuation,
Yeah.
or an agreed upon price,
Yeah.
rather, for the shares of the company, right?
Yeah. When you go back to like when I was litigating, I talked about like partnership disputes.
Mhm.
Those disputes came down to situations like this sometimes, where the unforeseen happens, or they just want to get out, which is another thing that I like to cover in my docs. But there's no mechanism stated in their documents that says how you can do it or when, for how much. So what oftentimes is the result is litigation. Now both sides are spending a lot of money to get an answer for someone who, if it's just a bench trial with a judge, is just kind of throwing up their arms, being like, I don't know, probably just going to split the baby here, But the lawyers are happily to take on that case. It's something that can be so easily avoided with just, usually it takes a few different discussions to narrow it down. But then when the situation arises, I've had the success story on the other hand, again, fortunately for a tragedy such as that, but the surviving owner knew their options, exercised. I mean, in the case of a fatality suddenly, I'm not writing a doc that says the survivor's buying a share back for $1. No, you're still taking care of that person's family. And the end result in that situation was, after dealing with the tragedy of it all, was the surviving owner gets the company and the estate got a cash payment that was a fair valuation for that interest, which is the way it should be, right? But unfortunately, unless you put that in your documents, the laws by themselves do not provide it.
And this is even more than what we talked about today, I think, right? But we should probably do this again. I think it's time we wrap this up, but there's probably even more areas that we can give business owners
I'm
tips,
sure.
right?
We could go into the contents of your car. Maybe, I don't know, mention the name of the podcast. Did we do that yet? And how those two relate?
So here's what we thought, right? And me and you have been talking about this for some time. And Nick, our producer, Nick is here.
Director.
Producer, director, co-producer. Nick wears a lot of hats.
He wears two hats. We've gone over them right before.
We should give Nick some props real quick. I think he deserves that.
Yes,
right?
I think that's a great idea.
So Nick is co-owner of VisImage. And VisImage really started as just a photography company, but then you guys got into real estate filming, video, weddings.
Because a lot of our family members and friends were getting married, so we figured that's a good point to jump in.
So talk about a small business, and I'm going to speak firsthand. I'm just going to talk off the cuff a little bit, like most of this. It's a small business that really they pride themselves on service and value and being readily accessible or available to their clients. And so that's why Nick is here, because I trust that we don't have to do this again, right? We trust that everything gets done well. But yeah, everything's getting recorded.
Did we turn it on?
But me and Nick were talking a little bit about maybe a year or two ago. I started drawing pictures, doodling about what we should call this thing. And I'm a fisherman, not a professional. I like to pond fish, right? And
your car suggests that's more.
My car suggests otherwise. It's loaded with fishing gear. Yeah. And so we think we're going to call the podcast Tight Lines. It's got a couple different meanings. We didn't want it to be too dry. We want it to be engaging and probably a little bit of fun and probably represent who I am a little bit.
Yeah.
So I think we're going to go with Tight Lines. And if we change it, then what do we have to do, Nick? Did you say we would just go through a rebranding process, you said? Yeah, so we don't want to do that. So we're going to go with Tight Lines.
That's great.
Well, I'm aging myself a little bit, right? So I come from the generation where if something was tight, it was kind of cool, or it was,
You're aging yourself.
Yeah, I am aging myself. But, with age comes wisdom. And I think that hopefully...
It could come.
Yeah, but I think also having the right guests on too, right? That's what we want. We want this to be an area where people can come, get some advice where they're not paying, right? They're not paying a consulting fee, right? And they're getting some direction so that when they are sitting in front of those billable hours with their attorney, or they're sitting with their financial advisor and they've got an hour window to meet with them, what questions should I ask? What should I research a little bit before I go into those meetings? How do I tie my professionals together? Is it always through referral, or can I take two people that I know and trust and can I introduce them?
Yeah.
Because I think most of their professionals would like to meet new people. And so, we hope it's helpful for people. Really do. And I appreciate you being here. It's been a long time coming, man.
Yes.
What are we at on time? About an hour and a half.
Wow. Hour and a half.
So I think that's good, man. We had a lot to talk about.
I can't believe we lasted an hour
Cool.
and a half.
Well, I'm going to rip off the Band-Aid. We're just going to end it like this. Thanks, Tim.
Thanks, buddy.
Appreciate it, man.